This is Solar on the daily chart. They announced earnings a couple of days ago, and we saw the stock crash uh, $50, 20+%. But the company warned you when they pre-announced 3 weeks ago that things weren't going to pan out. Things weren't looking good. Let's watch this video for the details.
Jenny, time to talk some SolarEdge. Stock is absolutely collapsing here intraday, down 25%. We were talking about Netflix having some big moves like this in the past and how you just remember these days. SolarEdge investors are going to remember a day like this for forever.
No kidding. And actually, this is them erasing some of those earlier losses. We were actually seeing some steeper selling when I was first looking at this name pre-market this morning. But here to tell us more on the move to the downside, I'd like to welcome in Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab. So Jeff, walk us through this move. I know that they gave some downbeat guidance, but there's also now analysts just piling in with the price cuts today.
Yeah, unfortunately, the hits keep coming today, as you pointed out, on path to one of the largest sell-offs we've seen since the IPO. They're breaking the previous record of almost 23% to the downside in November of 2020. Yes, this is coming from those preliminary results where they said Q3 revenue, gross margin, and operating income would be below their prior guidance. The company also said they see significantly lower revenues in Q4 of 2023 as they see this destocking process continue and slowdowns on installations in Europe continue as well. In terms of the numbers, Q3 revenue now expected to be between 720 and 730 million. Previously, it was looked to be between 880 and 920 million. Adjusted gross margin now expected within a range of 20.1 to 21.1%. Prior expectations were 28 to 31%. And adjusted operating income now in the range of 12 to 31 million. The previous expectations were 115 to 135 million. So some really big adjustments there. And we've got analysts weighing in. Certainly, tons of analysts have downgraded the stock. They've moved their price target. We'll touch on a few of them. Deutsche Bank lowered them to hold from buy with a price target of 150, now down from 300. Roth MKM downgraded them neutral as well from buy. Price target at 100, down from 280. Goldman Sachs to neutral from buy with a price target at 135, down from 254. So it seems like analysts were as shocked as investors today and are really having to make some adjustments to their prices.
Jeff, I was wondering how you kind of assess these things. When I look at a name that does this in terms of, I almost consider this an early release of the earnings. I know that their stated date for release is November 1st, but I always kind of say this takes a lot of the sting out of that November 1st release. We got a pretty good idea of what those numbers are. That's why you see this rapid repricing. How do you see these next few weeks going as we lead into that result officially released on November 1st? Is this kind of the move, and then that'll just confirm it?
Certainly, we've seen that in the past, and I think investors are hoping that this is the last or the worst of the sting that we're going to see, that this really has paved the way for what the results will be. I don't know that the other names that are down in sympathy are as excited about this release. You know, certainly this could have a big effect on the entire industry, and especially when we look at the residential side of it. I mean, if you look at some of their competitors, you think Enphase, which is one of their most direct competitors, already down 60% over the last 12 months. You look today, they're down about almost 15%. This has been certainly had a lot of pressure, you know, with the exception of really First Solar, which is almost flat right now. Most of the other names are down significantly.
Yeah, and that's been the case this year. I feel like we've seen such a divergence in the performance of these alternative energy stocks, showing that they don't always trade in tandem, but unfortunately today they are trading somewhat in tandem with SolarEdge's specific downbeat guidance. But then we'll leave it there. Really great breakdown. Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab.
So this is the monthly chart on SolarEdge. Right now, price is at a key level. Why is it a key level? Well, it once was the all-time highs back in May of 2018. And typically, when something's resistance, you get a breakout to the upside. It becomes support. So you had a rally in price based on candles and a rally out. Price pulls back to that previous all-time high or resistance before skyrocketing higher. Now, again, this is the monthly chart, and price was range bound for many, 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 many months. And then price started breaking down, and when it closed below these demand wicks, the story was over. And since then, price has again been cut in half since September. And on the way down, prices form levels of interest from a seller standpoint. This wick over wick at $160, that's the level to sell. This gap, price tried to close the gap and then collapse. That's another level of sellers. And at the moment, it's early. We have potentially price trying to put a bottom in, but it's only the first week in November, right? That's a hammer candle. Kind of going down to the weekly chart. This was that level I was talking about at 160. And this was that level that I was referring to where price tried to fill the gap but couldn't. Right? So you got levels of interest from a seller standpoint at 160 and 120. Again, the 120, you can see the rejection wicks. And again, for the week, price is trying to put in a low. It still may close red, but it's trying to put in that low. Now below this band, we close below the low end of this band. Price can continue to move down to the $40 area is the next stopping grounds, right? That was resistance, resistance. Again, should serve as support. Kind of like what we had here. But the collapse doesn't mean it's time to buy. Going to the daily chart. There could be more blood in the streets as the bulk of SolarEdge's sales are coming from Europe. And sales are way down because energy prices are way down. Significantly down from the start of the Ukraine-Russia war. And so that's why SolarEdge is taking a beating because comparable sales to a year ago, 2 years ago is drastically down. So again, I would not buy SolarEdge at this level, even though it's $50 down from earlier this week. In this case, you want to see the fundamentals kind of line up with the technicals, and at least with the remaining of the year, I do anticipate more downside risk. Thanks for watching. Subscribe. Please like the video.